Globally, equity markets have seen a great run in the last couple of months. What's the future outlook and how should foreign investors look at India? Here's Ankit Sancheti, investment manager with Kotak Mahindra Asset Management Singapore Private Limited. Hi, Ankit. And what do you make of this rally of sorts that we've seen for global equity markets in these last 6 odd months? There is, of course, that expectation from central banks, particularly Fed, that's wavering. What's your outlook on what's gone behind us and what's to come?
Globally, equity markets have been very resilient despite the backdrop of interest rates being on the higher side. This resilience has mainly come because of continued strength in the US economic activity. And if you look at the European region also, we have seen continued economic strength after a challenging 2022. From the interest rate perspective, if you look at the Fed commentary, Fed has been communicating higher for longer in terms of interest rate outlook. And for 2024, there is an expectation of one rate cut by Fed. On the other hand, if you look at ECB, they have already done one rate cut of 25 basis point recently. But again, they are non-committal in terms of subsequent rate cuts. So given the backdrop where markets have been very buoyant, and the fact that we are going to see two major elections in the next 6 months, starting with the French election, which are due in the next month or so, and the US elections, which are scheduled in November of 2024, we believe that globally the markets can remain sideways to in a kind of a range bound scenario.
India just concluded its general elections. How do you see that and the results sort of impacting Indian markets, Indian macros?
Heading into elections, we had a view of the BJP-led NDA alliance to form the government, with BJP on its own coming or getting a stronger mandate versus 2019. The basic premise was in terms of policy and political continuity after the elections. If one look at the actual outcome, the seat count share of BJP has been lower than the market expectation. So while they have formed the government, they have formed the government in a kind of a coalition structure where they have to now rely on allies in terms of continuity on the government side. This in turn has raised some bit of a concern in terms of policy priority of the government. However, if one look at the cabinet formation, which happened last week, it clearly indicates the action by the government that they want political continuity. If you look at the Modi's tenure in the first term, the focus was clearly on major policy reforms. In the second term, the focus was on infrastructure creation and also in terms of pushing on the manufacturing side. In terms of the third tenure of this government, we are looking at more of the same, but with a kind of a balancing focus in terms of rural investment, in terms of more focus on the social on the social or the lower section of the society, without putting too much on of burden on the fiscal side. Outside of the election, if you look at other macro variables, be it current account deficit, fiscal deficit, be it economic growth rates, be it inflation, be it from a currency perspective, all these macro variables are in a very steady shape. In fact, they have been on an improving trend basis. So with elections now being over, we are seeing that markets are reverting back on the fundamental perspective.
The general commentary around India is strong fundamentals but expensive valuations. Do you think that these premium valuations that India commands comes deservedly so?
Yes, this point has come for discussion multiple times. And if you look at India's from a historical perspective, India has typically traded at a premium to emerging markets. This premium multiple has come down, or the markets have traded at discount only in the scenarios where there has been a macro crisis. If you look at the last decade, on all the macro parameters, India has turned out to be in much better shape. India's forex reserves are the highest it has been in the last decade or so. If you look at from an inflation perspective, the successive inflation prints, the month-on-month inflation numbers have been coming down. On the fiscal deficit side, also on the current deficit side, also India has done much better than where it was a decade back. If you look at from a corporate balance sheet perspective, corporates have delivered their balance sheets in the last decade. Banks' balance sheets are also in the best of their shape today, both from a capital perspective and also from a non-performing asset cycle perspective. Earnings has been very resilient. If you look at corporates earnings growth rate, we are expecting mid to high teens of earnings growth rate from India Inc. ROE profiles for the underlying companies have been also improving. If you look at consensus estimates have been also on the improving trend basis. So given the backdrop where both the macro and the micro variables have been on an improving trend basis, India's growth rate, which is expected to be much higher than most of the other large economies, I believe that the valuations will continue to remain at the current levels.
And how would you advise foreign investors looking to invest in India? What approach should they go for?
Okay, so if you look at both on the macro and also on the micro side, India has been on an improving trend basis. The corporate earnings growth rate in India has been much more broad-based versus rest of the other markets where the earnings growth rate has been concentrated in either few sectors or in few companies. From India's context perspective, we believe that mid-market companies are better proxy to the domestic growth story, and they are expected to deliver earnings growth rate which are superior and sustainable from a longer term perspective. Markets are expected to remain volatile, and we suggest investors to capitalize on this volatility to increase their exposure on Indian markets and within India in the mid-market segment from a medium to long-term perspective.
Ankit, thank you so much for a very insightful conversation, and thank you, viewers, for tuning in. Do stay tuned to Kotak.